Global markets teeter on the edge of a major sell-off, fearing a recession. The federal government wants the Commonwealth Bank to counter the influence of China in the Pacific. And Warren Buffett dumps billions of dollars worth of Apple shares. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 5th of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, global markets are really teetering on the edge of a major sell-off as investors become worried about a recession in the United States, and the fears are now set to push the local ASX down in coming sessions.
Over the past couple of days, there's been a run of data in the US suggesting the world's largest economy might be heading for a recession. US hiring slowed sharply last month and the unemployment rate rose to the highest level in nearly 3 years, suggesting a faster deterioration in the labour market, at least compared to previous estimates. Then a key manufacturing activity index fell. That suggests that sector is in contractionary territory. Putting all this together, investors quickly went from looking forward to lower rates to fearing a recession is on the way. Suddenly, they're talking about the Fed being too slow to act. Not helping has been some of the tech stock earnings results. Apple announced a 5% jump in revenue in the June quarter, pretty good. That's on the back of its services business and a surge in iPad purchases. But iPhone sales, that's the heart of the business, continue to decline, particularly in China. Intel, once the master of the chip universe, no more. Late last week, the company revealed plans to cut 15,000 jobs and reduce capital spending in an attempt to put its business back on a stable financial footing. Its share price tumbled 26%. Bring it closer to home, Atlassian. It's promised investors it will soon start winning more business off the world's biggest companies after its share price tumbled 17% after a big earnings miss late last week.
Wow, that company's under a bit of pressure then. Sean, putting all of this together, what does it mean for Australia?
Well, the local share market fell more than 2% on Friday. It was the worst one-day fall in 16 months. Now, that, of course, is after hitting a new high on Thursday. The sell-off on Friday was across the board, particularly around energy stocks, the big banks, miners, some of the tech stocks, some of the retailers. Futures trading suggests the sell-off will continue today. What's going on is markets are at least they were very highly valued. We've been talking about this concept of priced to perfection. One slip up and a sell-off was inevitable. Problem is, there's been a few slip-ups, at least in the US. Tech stocks have disappointed. Also, this macro environment, the labour force in the US, is showing signs that maybe the economy is slowing down fairly quickly. Michael, it really is the ultimate fear and greed story, or maybe it's greed and fear. Everyone was very greedy on the way up, wanting to be part of that big upswing. That's where we got to that price to perfection. Suddenly, you get some bad news, some poor economic data. Fear kicks in, you get this big sell-off. So it is really the ultimate greed and fear story.
Yeah, it certainly is. And it's also perfect timing for the interview that you have coming up today. After the show, you're speaking with Bruno Paulsen, who is Managing Director of Morgan Stanley Investment Management's International Equity Team. And he took the opportunities in Australia for a short period of time to catch up with him.
Yeah, we talked to Bruno about what he talks about compounding returns on equities. We know all that compounding interest and how important that is when you've got money, on a term deposit. Well, he's talking about the same thing for equities. You invest in high quality companies that give strong returns and you keep doing it. And even when you end up in a pretty challenging environment, you can end up with some fantastic returns on that. What I thought was fascinating. So we talk about companies. I mean, there are a few rules he has: recurring revenue, high return on capital, wants price makers. So I asked him about the miners. He goes, no, never invest in a miner. I said, what about the Australian banks? No, never invest in the Australian banks. But then he does tell us what he does like. So it's a fantastic interview.
Yeah, indeed. It's a great chat. It's coming up after the show. Sean, so equity markets are selling off. We have covered that, I would say, reasonably comprehensively. Mm-hmm. What about other financial markets, bonds and commodities?
Well, yields on US 10-year notes tumbled over the weekend, suggesting people think interest rates will fall soon. Bond yields locally have also been dropping since last week's inflation figures opened the way for a potential rate cut in Australia later this year. Over the weekend, Brent crude fell to below $77 a barrel. That's the lowest in 2 months. Futures trading in Brent crude was down to about $74. Gold, however, which is where traders go when they're worried about the outlook, hit a new record high of $2,474 an ounce. The Aussie dollar also got hit. It's trading around 65 US cents. Now, markets tend to overshoot on the way up and also on the way down, while the movements over the past couple of sessions might be an overshoot. I say might be because who knows. Certainly, sentiment has turned over the past week or two. That will all feed into the Reserve Bank of Australia's board meeting today and tomorrow. Tomorrow afternoon, they'll come out and let us know what they're thinking on interest rates. No one expects them to shift the benchmark rate, but they might just start sounding like they're thinking about moving rates lower, and that would be significant.
You know how the meeting takes two days? Well, it's really 1.5, isn't it?
Yeah.
Effectively. Do you reckon they make the decision on interest rates very early in the meeting? Because imagine by kind of 10 o'clock today, 10 o'clock Monday morning, they've already decided. Then it's like, okay, what are we going to chat about for the next 24 hours?
Scones, anyone?
Yeah. Just suddenly they're talking about kind of, you've been watching Survivor, all that kind of.
How about them Olympics, eh? Yeah, not bad.
Oh, yeah, that too.
Yeah.
Just because you would think that on some occasions they would get to that quite quickly, wouldn't they? They would get to the interest rates.
I reckon you'd have to have a lot of Excel spreadsheets, a lot of PowerPoints between.
A lot of people coming in to make presentations and various things.
So.
Okay, so maybe the Olympics are just confined just to the lunchtime discussion.
Oh no, I think it'd be well beyond the lunchtime, but I reckon they'd have to go through a lot of presentations before making their decision, even if they knew by 10 o'clock this morning what the decision is. They still have to put up with it, I reckon.
Yeah, I think you're probably right. There is a lot going on, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the Albanese government is in negotiations with the Commonwealth Bank to set up shop in Nauru to help counter China's growing influence in the South Pacific and among Australia's closest neighbours.
The Australian Financial Review is reporting that the talks are progressing, and a critical point is how much taxpayer support is warranted to set up a Nauru operation, given it's likely to have little commercial appeal for the Commonwealth Bank. Nauru was once a popular banking destination. It had relatively loose regulatory settings, had hundreds of banks, apparently. The government cracked down in the early 2000s, cancelled bunch of licenses. The government closed the Bank of Nauru in 2006, facilitating a cash-only economy, which is quite an amazing thing to think about. That was until 2015 when it struck an agreement with Bendigo and Adelaide Bank to provide limited financial services. Now, last year, Bendigo said it would exit Nauru to reduce complexity and simplify its business. Bendigo had planned to leave the country by December, but extended it to June next year after the Nauruan government signed a memorandum of understanding with the Bank of China to explore a succession plan. Now, Canberra is stepping in, putting the pressure on Commonwealth Bank, at least according to the report of the Financial Review, to take a role in that economy.
Still on politics, Sean, Prime Minister Anthony Albanese has stopped short of saying Australia is a more reconciled and united country after the failed Indigenous voice to Parliament referendum, instead declaring, quote, there has to be the objective to achieve that.
Yeah, so he said that we need to be optimistic about how we look forward. He was on the ABC's Insiders program. Mr Albanese has spoken very little about the failed referendum ever since it was held. He said there is considerable hurt from both the outcome and the way the campaign was conducted. He added that reconciliation is a process of people's needing to walk together. Mr Albanese said Australia as a nation will benefit from being more united and from being more reconciled with our history.
Sean, it was a pretty poor weekend for the housing sector, with the combined preliminary clearance rate falling below 70% for the first time in a couple of months.
Yeah, and in fact, there were fewer homes at auction as well, so that makes that number probably even worse. Melbourne was home to most auctions. About 800 went under the hammer, came in at 70.4%. That's the preliminary clearance rate, up slightly from a week ago. Sydney held the second largest volume of auctions, just under 600. The rate came in at 69.4%, which is actually quite a sharp drop from the previous week. Brisbane was 69.4, Adelaide 66.7, which is big come down for that city. ACT came in just under 50%. Just before we leave the housing market, there's some pretty interesting figures out on Friday. The value of new housing loans rose 1.3% to about $29 billion in June. What's happening? Investors are very much underpinning the surge. The value of investor loans was 30% higher than a year ago, while for owner-occupiers it was less than half that. One sector that has definitely flatlined over the past couple of years is first home buyers. So their proportion of total new housing loans really has fallen in a steady state for two or 3 years now.
This is an interesting one, Sean. Almost exactly 3 years ago, US-based Block paid $39 billion for local buy now, pay later group Afterpay. Block, over the weekend, upgraded its earnings guidance and promoted Nick Molnar, who co-founded Afterpay from his garage, to head of sales. He's now head of sales, reporting to CEO Jack Dorsey.
It's quite a journey for the one-time Sydney Sonic. In fact, do you remember we had Anthony Eisen on the show? And I think Nick Molnar and Anthony Eisen lived in the eastern suburbs of Sydney. And he sort of told the story that they were, they lived opposite each other. And they sort of shouted, "Hey, I've got this good idea." Yeah, what is it?
They used to chat while they were taking the garbage out and stuff. Yeah,
that type of stuff. And that's how Afterpay came about. Anyway, Nick Molnar's done well. He will oversee the whole business, including Square, from a sales perspective. Now, Square, of course, is the instant payments terminal. I know you like that one because you always complain that we're going on tangents here, but every time there's a federal election and you go to the local school, you get the sausage sizzle, and all of a sudden they've come out with a Square.
I expressed amazement once to you, Sean, about the fact that you could even pay with your card now at a sausage sizzle, and you were so dismissive. You're like, "Oh, they've been doing that for ages," and you have never let me forget it. Once I complained.
Anyway.
Thanks.
Nick Molnar's in charge of sales for that one too. There you go. If you look at the financial sales across Afterpay's platform are running at about $31 billion a year. That's double the level of 3 years ago. So clearly it's picked up significantly. Loss rates were low, in line with historical levels. So, not that I'm one to judge whether it was a good purchase from Block, but obviously Afterpay is doing pretty well. Total sales at Block across the business actually rose during the June quarter. The other co-founder of Afterpay, Anthony Eisen, he remains co-lead of Afterpay at Block. So he's still in the business as well.
I don't know about you, Sean, but if I had sold my business for $39 billion, and obviously they didn't receive all of that, I think Nick Molnar is worth somewhere between $1.5 and $2 billion. And he's 34. If I was a 34-year-old and I had somewhere between $1.5 and $2 billion in the bank, I'd probably say, you know what? Stick your promotion. Buying a yacht.
Well, the other end of that was last week, Harry Triguboff, who I think is 93.
Yeah.
Meriton owner, incredible property man for many years. He anointed a successor for when he no longer is running the business, which is pretty cool when you're 93.
Yeah.
Now, no one on those rich lists, you don't ever say, rich list worth $2.5 billion. What are they doing? Not much.
Yeah.
Beach at Byron.
Yeah.
They all seem to be working still.
Yeah, that's a good point. Maybe it's my attitude.
Maybe it's you.
Yeah. Once again, we come back to that. Sleep apnea group ResMed said revenues jumped 9% in the June half as expected, as the medical device maker sold more breathing devices, masks and software.
And Chief Executive Mick Farrell said rather than the new generation of weight loss drugs being bad for ResMed, which we all thought, they could end up being a boon. Now, 12 months ago, ResMed was sold off on speculation that weight loss drugs, such as Ozempic, will lessen demand for sleep apnea treatments. But on Friday, Mr. Farrell said the new drugs were a catalyst for more people to engage with the health system, triggering a business opportunity for ResMed. ResMed is listed both here and in the United States. Mr. Farrell said the fourth quarter and full year fiscal 2024 results demonstrate a strong performance across all sectors of the business. Its share price initially jumped, but then it finished the day down 2%, which was about what the market finished down.
Here's one, Sean, very much for Nick Molnar and Harry Triguboff. After our conversation before, researchers have uncovered a secret ingredient for wellbeing in retirement, being able to choose when you retire.
It's not all about the money, apparently.
Well, that's what you were trying to tell me before, wasn't it?
I think so. A new study by Macquarie University in Challenger has found that seniors who are able to choose the timing of their retirement have much less stress after leaving work. 10% of Australia's population is set to retire in the next decade, which is a phenomenal number. And financial security also plays a key role in giving seniors freedom and empowerment. Now, it's a study of 1,000 people aged over 60. According to The Australian, the research also found having a clear purpose is vital for a positive retirement, and that seniors receiving a guaranteed income reported higher levels of mental health and better social connections. The findings have a slight flaw, Michael. Not everyone can choose when they want to retire. I would be quite happy to retire now, for example. Well, after the show, probably.
After today's a mid-show retirement, you just leave before we even get to international news. You would miss me too much.
I wouldn't want to retire. I mean, there was some research from Aware Super out earlier in the year that said 2 in 5 Australians are being forced into retirement earlier than they planned. It might be health issues or redundancy or burnout or whatever. So, I mean, I like the idea that you should be able to choose when you want to retire, and that's good for your well-being. The only problem is not everyone can.
All right, turning to international news now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. And Sean, Donald Trump says he is dropping out of the next organised debate scheduled for next month, presenting a counter-proposal to his opponent, Vice President Kamala Harris, to face off on Fox News 6 days earlier.
Yes, now Fox News, of course, is far more sympathetic to Donald Trump than ABC, which is the scheduled broadcast network that is supposed to be running the debate. The change, which Trump announced on his social media site Truth Social, triggered accusations from the Harris camp that the former president is scheming up the Fox News debate to distract from reneging on his commitment to the ABC debate. Trump had agreed to that debate in May before President Joe Biden dropped out of the race. The Harris team basically is saying Trump is running scared. Don't know whether he's running scared, but I tell you what, he's a little bit more worried than he was a couple of weeks ago.
It does seem that way. Now, this next story, Sean, is part 2 of the Follow the Money segment, which I think we've actually just made up on the spot, haven't we?
I think so.
And again, funnily enough, it is about Warren Buffett. It could just be the Warren Buffett segment, couldn't it? Because he is the greatest investor of his generation. Mr. Buffett's Berkshire Hathaway has sold half its holding of Apple shares. This is big.
Yeah, he sold 390 million Apple shares in the second quarter, on top of the 115 million shares in the first quarter of this year. Now, that's as Apple's stock price rose 23% in that 6-month period. Berkshire Hathaway still owned about 400 million shares. That's about $84 billion worth, but it suggests that he has sold about $100 billion so far this year. In recent weeks, Berkshire has also been selling down its holdings of Bank of America. That was actually the first part of this segment that you've just created, Michael, the Follow the Money segment. What it means is Mr. Buffett is growing wary of tech, stocks and banks. That's the Follow the Money part of it. Slight problem is that Berkshire now has a record cash pile of $277 billion. Doesn't know what to do with it.
It's a quality problem.
High quality.
I can help them with that.
Apple's been one of Berkshire's most important equity investments in recent years as US tech stocks powered the broader market. Previously, Buffett and his late investment partner, Charlie Munger, had been really wary of investing in tech stocks. They'd been burnt by IBM in the early noughties, though that they changed their minds, and over the years they lamented in the fact that they'd sat out opportunities in businesses such as Google. They jumped into Apple. Anyway, now Mr. Buffett looks like he's selling out of Apple. Not totally, but certainly, $100 billion worth. It's not insignificant.
Sean, it has been a wild ride today. Up next is Fear and Greed, the week ahead, featuring our resident economist, Stephen Kukulis. Very, very excited today.
Very, very excited. Any time there's a Reserve Bank decision in the offing, Stephen is ready to go. So we talk about all those numbers from last week, what the inflation figures mean, what he expects from the Reserve Bank today. Definitely a must listen.
Indeed it is, as is the interview that comes up after that with Bruno Paulson, Managing Director of Morgan Stanley Investment Management's International Equity Team.
Yeah, all about the type of companies they like investing in and the ones they don't like investing in. And there's some really big name Australian companies which this fund in particular is not going to be investing in. So that's well worth a listen to.
Yeah, it sure is. They are coming up in the Fear and Greed playlist on your podcast platform, or you can find them at our website, fearandgreed.com.au, which is also where you can sign up for the free weekly newsletter that we send out every Wednesday. So now is a perfect opportunity to do that. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 5th of August, 2024. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.